Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday morning pre-market webcast. Okay, so just taking a step back and looking at the week. Monday, Tuesday, Wednesday, we go down. We hit that 55 area. We bounce off the lower band as discussed, and then the bears just do El Foldo. We came in yesterday. There was an inability to hold the 68 to 70 area. And then off the open, they lost the daily mid-band, which at the time was around 74.25. That just made the day just one big long. We longed the open, 75 quarter. We went ahead and it converted our proprietary area. So here's a 5-minute chart, and here's basically the anatomy of the bears blowing it. You had daily mid-band at the time right around 74.90. We opened. They spiked it up off the open. We chopped for a solid 20 minutes, but we just kind of flagged back to the daily mid-band, and once that held, we were off to the races. We went up and broke above weekly pivot, confirmed that as support, and at that point, the bears just lose control of the tape. How many key areas are you going to lose off of the lower band before the bulls just say, you know what, let's go do another 10, 12 handles and go ahead and threaten the all-time high. The proprietary area converted. That actually gave folks a second long if they wanted it, which ended up being another 4+ handle trade. So, we sold off a little bit into the close. I was short overnight, but you can see as the night progressed, you've got an inability to get through weekly pivot. It was short 86.5. It got, as low as 79.5, but it could not get it done. You've seen a rally and a comeback here. So what I'm looking for today is, does the 9-day simple moving average, remember the blue line was the bull's best friend here. Bears had held it. We closed over it. We're back to test it. Comes in right around 81. Is that area going to hold? If it is, I think it's a springboard to test to go back to the upper band. Remember we talked about upper band, middle band, lower band, middle band. What's next, right? In an S&P market that's operating correctly, normally, and those are subjective terms, what you typically see is a movement from band to band to band. Upper, middle, lower, middle, upper. Sometimes it takes a few days, sometimes it takes a couple of weeks, whatever. What you don't see is what we've seen for the vast majority of 2017, which is just hugging that upper band, not dealing with mid-band for weeks at a time. That will happen, but typically, this is the kind of price action that the S&P produces, and that puts the all-time high under direct threat today. If 81 holds up, if 79 weekly pivot holds up, then what you're going to see, this is hourly chart, if this higher low holds up, higher low, daily mid-band resistance, back to test, you make a higher high versus 89.5, you will get a 94, 95 print pretty quickly today. Trends rarely reverse themselves on a Friday. Bulls were in firm control yesterday. They have the advantage heading into today. The bears have no argument. They have no viable argument anywhere above weekly pivot. They're going to have to break this area for me, convert it to resistance before I really consider any type of a short trade that is anything more than a quick little counter trend, rental type job. I told you yesterday morning, yesterday was not the day to fight price if they took out the daily mid-band. I hope the vast majority of you heeded my warning, because if you fought price yesterday, you had a very long, lousy day. If they can't take out weekly pivot, if they make a higher high, this is another day. Don't fight price. It's not worth it. Not worth it. All right. Everybody have a fantastic day. We'll do an update on Twitter and Instagram later. Trade them well. I will talk to you then. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.